Hi fellow traders, and welcome. It's Sive Morten from ForexPeaceArmy.com. We are happy to welcome everyone in our latest daily gold review. As usual for the weekend, we've put together a weekly review, a fundamental analysis of gold where we, like always, look at things related to gold pricing, new forecasts, investor perspectives on the market, and a general market overview. We also paid attention to certain special aspects related to Donald Trump's behavior both on the domestic political stage and internationally. We're not so much interested in the specific content of tariff agreements or aspects of secondary sanctions. What we're more interested in is Trump's behavior itself. How does he act? What decisions is he making and why? We've noticed that for the last couple of weeks he's been pretty irritated and on edge. And this is tied to several reasons that could have mostly geopolitical consequences, though there might be impacts on the domestic market too. For instance, we know the Senate goes on vacation in early August until September. Accordingly, no new decisions will be made. The country will basically experience a kind of power vacuum where Trump might take some actions to push the Fed toward a more dovish policy. For example, some problems might start popping up in the markets. We dive deeper into this in our review. I'll put the link in the description for this video. Now, let's check out the technical picture and see what we've got. Last week we had a bit of bad luck. The thing is, the moment when we planned to enter the market, it coincided with the date of the unemployment data release, and this led to us falling just short of our target point where, according to our analysis, we were supposed to look at the opportunity to buy gold. It's not a big deal. Now let's see what we can do even after this movement has already started. That is, on the weekly chart, we still believe that we hold the view that gold still has a bullish sentiment. The pennant remains here, it hasn't gone anywhere, and the formation of a pennant near the market's high is always a bullish sign. As we've mentioned several times before, we're seeing what's called dynamic pressure here. This occurs when the trend nominally points to a bearish direction, while the overall price behavior is absolutely not bearish. You can see the market is creating higher lows, and this triangle consolidation pattern generally suggests the market is gearing up for a breakout rather than reversing course. That's the weekly chart situation. So on the daily chart, the movement we saw during the data release could be the start of a major upward continuation. Overall, dealing with such movements is relatively straightforward. Why? Because if a strong move has started, then by definition it should become the exact point of reversal and acceleration. Thus, if it doesn't become one, and the market simply wipes it out, dropping below its lows, this suggests that we will most likely see a much deeper correction here, because the market simply failed to take advantage of the momentum from such a significant move, which simply indicates its weakness. Therefore, in order to control this movement, we need to look, first of all, at the lows, which are the point of no return for this reversal. And second, for the market to keep its overall bullish trend, it can't have these huge corrections during the day after going up. That is, it should not attempt to wipe it out. To wrap up our daily chart talk, the main thing we need to watch for Monday or Tuesday is whether a bearish grabber shows up here. Because if you look, our market is still nominally bearish, judging by the MACD indicator. The price is slowly creeping up to this indicator. We need to keep an eye on whether a bearish grabber forms or not. For us to feel at ease, we need it not to appear. So that's something to keep in mind. Next, going down to the 4-hour chart, what do we see here? The market's getting close to that 3373 resistance level, which might give us a nice little pullback so we can look for a good spot to jump in. Besides the big butterfly pattern we've got on the daily chart, we might get a smaller butterfly too. You can actually kind of see it here on the daily chart already. Well, on the 4-hour chart it will be more representative. Our next target is at 3507. But honestly, this only matters if this moment right here actually becomes a turning point and the market starts heading upward. Come Monday, we'll be keeping an eye on the key levels on the hourly chart. You can see all the support levels right here. Clearly, the 3322-3326 level is key here because it's where support lines come together. It's way stronger than those individual support levels. I still think we might see a dip down to 3304. Even though that's a pretty deep level, the thing is, the market has formed an upward reversal pattern now. You can see the trend of lower highs and lower lows has been broken. And very often at such times, the market can make deeper corrections. I'm still hoping we'll mostly stick to this level, but at the same time, if we happen to see the downward trend continue to 3304, it doesn't mean our overall plan isn't working anymore. It might actually be better for us since we could set a tighter stop loss. That's about it for today. Let's see how the market opens on Monday, and I'll just stick to the plan we've got.